On silver, you're watching for a $30 break. And if you can get a $30 break where price stays above 30 for, let's say, a 2-day period, I think the next leg up is to 35, then 37.50. If you're asking for a longer term price point, I would say the $50 level is where it's ultimately headed in the next 12 to 18 months.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 13th through May 20th, 2024, while supplies last. First, we feature 1 ounce Gold Krugerrand at $49.99 over spot. We also have 2023 Silver 1 ounce Krugerrand at $3.10 over spot. And finally, we have Silver half ounce Canadian Polar Bears at $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Gareth Soloway from verifiedinvesting.com. Gareth, thank you so much for joining us today.
Thank you so much for having me. Always a pleasure.
Well, it's great to have you today. I did want to discuss the precious metal markets. First and foremost, it seems like we're seeing silver testing the $30 level and gold also testing that $2,400 level. Now, the $30 level for silver seems very significant. Your perspective on what is happening right now?
Yeah, and you're right about that. That level on silver is a huge level. In fact, it's basically been a level there. If we look at the chart, we've seen it hammer into. This is actually the fourth time it's hit $30, right? So if you go back to 2020, we hit it once, 2021, and then more recently we've hit it again in April, and then here in May again. So the way technical analysis works is that the more times you hit a level, the weaker it becomes. And I do think we may be due for a small pull back here, but I think it ultimately breaks to the upside. And I love to kind of show the comparison if we look at gold, because gold had the same formation, right? The only difference is gold has broken out already. But if we look at this, right, we could do 1 hit, 2 hits, 3 hits, 4. And then basically you had 5 in consolidation and then the breakout. And so what it does is it tells us that it seems like around the 5th hit of the line, that's where you get to that breakout point. And so going back to silver, that's kind of what I'm expecting here. Maybe just a small consolidation move back off of this level and then a big breakout at 30 to kind of take us to maybe 35 in the near term. But really, I think it's the start of maybe a short squeeze that could take us even higher.
Now, when it comes to gold, I mean, obviously we are seeing, we did already see the breakout there, but when it comes to silver, what is your take on the levels we're going to be seeing next once we break through this 30 level?
Yeah, so if we zoom out to a bigger time frame here and we go to our weekly chart, what we can see is, again, here's your $30 level right here. And then the next big pivot point where we saw a big push up was around the $35 level. So just looking at that as a technician on the charts, that would be your first resistance. So we really should go for, once we break 30, I think within literally a week or two, we probably find ourselves at 35. And then there'll be a minor resistance at around 37.5. But really, I think if you ask me where this is in the next year to 2 years, I do think we are retesting that $50 major high on silver that was made in 2011. So I really do think, I think again, one of the things investors in silver have to understand is that it is partially an industrial metal, right? So it's a store of safety, but also industrial. So if we did see a slowdown in the U.S. economy, it might come back in a little bit. It might consolidate a little bit, but you can't deny that the U.S. government is going to continue to run up the debt. The Fed is already talking rate cuts this year, even with inflation north of 3%. And so all of these type of things lend us to believe that over the longer term, precious metals will go higher.
Now, as for the fundamentals of what's driving this latest move here, we did have the inflation numbers and they were better than expected. So inflation was not as high as a lot of people expected, which makes a lot of investors think that the Fed is at least not going to raise rates, or maybe they'll cut rates this year. Your take on the fundamentals we're seeing?
Yeah, so I think that's the key, is that the fundamentals, people are really starting to come to the conclusion that you have a U.S. deficit now or debt that's at $34.5 trillion. Interest alone on that is over $1 trillion a year. And there's really no signs that the U.S. government wants to get that under control. So in your head, you have to be saying, okay, well, by the end of this year, we're probably at 35 or 36 trillion. And then it only gets bigger and bigger as that interest payment continues to grow in the future and spending continues. And remember that during expansionary periods, that's where the government is supposed to pay down the debt, right? Because they're bringing in more tax revenue. But we haven't seen that in the last few years as the economy has been good. So what happens when the economy does go into a recession? Do they spend even more money? And then you take a look at the Fed balance sheet, which they did reduce, but only 10%. So it seems like the balance sheet goes up 100% every kind of troubled period and only gets reduced 10% before going up 100% during the next crisis. And so these are all just leading us to believe that there's really no other place to go to protect our dollars. And really, this could be yen, this could be euros, this could be yuans. There's really no other place besides crypto, probably, and this precious metals. And so fundamentally, it just puts us in a perspective of saying, you got to have exposure to the metals. There's really no other way to protect your buying power.
Now, it's interesting because since the inflation data came out, we've seen also a run in the stock market. And this morning, as we're recording this on Thursday, we saw for the first time the Dow broke through the 40,000 level. So your perspective on where the stock market is right now, and do you think this run will continue?
Yeah, so I kind of liken what we're seeing right now to, pre-2008, where we all saw the deteriorating housing market. We saw what was going on with the financials. And there was still a multiple period month where the stock market made new all-time highs because, retail investors are not focusing on that. They're chasing momentum. They're feeling FOMO, fear of missing out. And so I liken that period and what we even saw in the late 1990s into 2000 before the dot-com crash as what we are seeing right now. So you're right, the Dow amazing to pierce that huge even number, but I don't necessarily think it's going to last. And I say that because if you look at the data, right, I mean, we got lots of data this morning. We've seen GDP come in weaker than expected. We've seen the non-farm payrolls weaker than expected. We've seen U6 unemployment creeping up now for the last 12 months. These are all signs of a recession on the horizon. Now, the reason why investors are so eager to buy is because in the investor mind, they're like, well, the Fed can just print us out of this mess. Well, yes, if inflation was 2% or lower, but if you still have a 3% or 3.5% inflation rate, how does the Fed print a lot of money knowing that it's going to contribute to another wave like the 1970s of inflation? And so there's going to be this pivot where the retail investor finally realizes what's going to happen. And I do think at that point, the stock market has a massive leg down in its future. And probably over the next 6 to 12 months, it's going to happen.
Now, this idea of a recession coming soon, you anticipate that will happen probably before the election?
So, oh man, that's so tough. So I don't think that it will be officially proclaimed a recession till after, but I do think that there are, so basically already we know that, Red Lobster is likely filing for bankruptcy in a month. We've seen Boston Market. We've seen other fast food casual kind of places going out of business because anyone making, let's say, less than 60,000 is essentially now being priced out of going out to eat. And really even McDonald's has said that people making under 50,000, they can't even afford to go to McDonald's. And so you're seeing the recession already hit the lower income brackets. But I think once the stock market stops making new all-time highs and corrects, you will see it then hit the middle income and even the higher end consumer. And so I think it's a rolling recession where some people already feel it, but you're not going to see it proclaimed a recession until probably December or January of 2025.
And will that cool inflation at all, or do you anticipate kind of a stagflationary environment going forward?
Yeah, I do think it will cool inflation. For instance, the crude oil chart is borderline at a breakdown already. In fact, I can show my chart here because I think it's worth taking a look at. So we've seen a top already in crude oil, and we can see it's hovering just under this major support line or just on this major support line. And eventually, I actually think it does break to the downside here and collapse. And we've also seen gasoline. UGA is the symbol for that. That's actually come in significantly, even with the bounce that it's seeing the last couple days. So a lot of these type of things are telling us that inflation probably starts to cool a little bit, but I'm still skeptical that we're ever going to really see a significant move below 3%. So I think I think right now the year over year reported in the CPI was 3.6%, or maybe 3.4. But either way, I think it comes in and stops going up, but I don't foresee it going significantly lower because, again, the Fed, as soon as we hit a recession, the Fed's going to come out and make policy much more lenient, and the government's just going to spend more money to make sure that they get reelected.
Back to the stock market here, if you could maybe show us a chart of that, maybe the SPY there, your perspective or on kind of the levels that we should be concerned about for a major break to the downside.
Yeah, so absolutely. So one of the things that I've been looking at here is if we go to our weekly chart, and this is a pretty powerful chart, and if we go back to the pre-Great Recession stock market, right? So basically, this is when we were making new all-time highs back in 2007, just before the collapse. If you take a trend line from those highs and you run it through the highs of 2022, we are just about into that level. So right off the bat, that's something catching my eye. It's looks like right around 53.50 as a high. So we're only about 30 to 35 points away on the S&P from that level. On a technical basis, that's going to be significant. The other thing I love to tell people about is just to remind people that markets tend to make this M-top pattern, and the second high is higher. And I love showing this, right? So here's your first wave. Then you had your correction. Then the buyers step in and we make a higher high. And oftentimes what ends up happening is we see a bigger breakdown afterwards where we get this monster move down. Now, a lot of people would say, well, where the heck does that come from? I mean, why is that going to happen? And number one, it doesn't guarantee that it's going to happen. But if we look at Bitcoin, right, let's go to the Bitcoin chart and we go back to the 2021 high. Take a look at what happened. We had the big run up, the middle corrective move, then we made a higher high, and then we all know what happened to Bitcoin. It went down basically 75%. If we look at natural gas, which is just off the top of my head, another chart that this has happened with, take a look at what happened. Big run up, pullback, then we made a higher high, and then we corrected 88%. Now, by no means do I think the S&P is going to go down 88 or 75%. But my point is that when we make these higher highs, it's not a guarantee that the bull market's going to take off again. In fact, historically, this is one of those things where you kind of squeeze out the shorts when you take out the previous all-time high. And then once those shorts are out and the max bulls are in, that's when the market actually has its bigger corrective move.
A lot of people have been talking about how over the last 40 years, the stock bond portfolio has been very good for investors. Do you see a major shift coming in the future where that no longer is really the best place to put your funds?
That's a good question. So I think that we are going to see interest rates, at least in the bond market, stay elevated above what we're used to, right? So, I mean, we know that a few years ago, bond market, I mean, who wanted to be in the bond market for 1-2%? But ultimately, I do think that it'll stay between 3 and 5% going forward. And I do worry that if the Federal Reserve decides to print us out of a recession, if political pressure is high enough and we start printing those dollars again, I really do worry that we may see even higher yields on the bond market, on the 10-year, on the 30-year down the line. And again, and you could go historically and say, okay, well, before the Fed was really printing money actively, going back to 2009, let's say, interest rates were much, much higher. And so, really, they've been artificially pushing them down because they've been lifting the stock market. And again, that pushes money into the stock market. And obviously what they've been doing with buying bonds and quantitative easing. But I do think that this is not going to end well. One way or the other, we're going to have to pay for the leniency and the printing of money that we've been seeing. And which brings us back to where do you put your money? And the answer is, well, I mean, you could put it in the bond market potentially and get 5% right now. But really, the metals are very intriguing. And this is one of the reasons why Bitcoin is becoming more alluring to not only, retail investors, but also institutions. Institutions see the writing on the wall. They have the best data out there. They're seeing what's going on.
Now, as for precious metals, I know we've seen quite a run up in both gold and silver. We've also seen just in the last week or so a run up in platinum, and palladium is also looking a bit interesting right now. Your perspective on the platinum group metals?
Yeah, so I actually do like them. I think that, again, if you're looking at there's different reasons to invest in platinum. We know platinum and palladium are used in industrial metal, production of different things. And so I think a lot of people look at it and say, oh, well, if the US economy is slowing, maybe these aren't the places to be. But I would take it from the other perspective and say, well, how do you protect? This is a precious metal, platinum, that is actually something like 10 times more rare than gold. And so for me, in thinking of how do I protect my wealth, platinum and palladium both do get my attention. And I think, again, part of it is as a metals investor, I want to be diversified, just like as a stock investor or a crypto investor, you want to be diversified. And so, yes, you've been starting to see that momentum building in platinum here. If we go to the daily chart, you can see this run here on the daily. It's starting to kind of stall out a little bit, which is normal after such a big run. But I think on pullbacks, you look to kind of continue to accumulate this. And then on palladium is actually my favorite here, because it still hasn't broken out yet. And so we see this big wedge pattern, and look at where this thing was trading, just a few years ago. It was trading north of $2,000 per ounce. And here it is underneath 1,000 an ounce now. So for me, I look at this and I say, okay, well, if it breaks this downsloping trend line, now we have a breakout, and that's where the bigger gains could come, 10, 20, 30% upside in a very short amount of time.
And as for palladium there, I know a lot of people have been pointing out that one of the reasons it ran up was because for catalytic converters, they switched from platinum to palladium. And the thought is auto manufacturers may be switching back. But do you still see bullish fundamentals in the palladium market going forward?
Yeah, and that's a good question, right? And I think a lot of that will be on what platinum does. So if the higher that platinum price goes, the more it's going to cost for these automakers, right? And so if palladium stays low, it may encourage those automakers to actually go back to palladium at that point. So I do think, again, these two metals are generally tied together, like these reasons you said. So I do think fundamentally, assuming palladium's price goes up, then yeah, it should just drag, platinum's price goes up, it should drag palladium's price with it.
And as for the US dollar, I know that's an important market to look at because it often will drive or be a signal for precious metals and also the stock market. Your take on where the US dollar is right now?
Yeah, so the US dollar has actually had quite a tumble here just in the last few days. It's getting a little bounce. This is the daily chart. So you can see yesterday when that CPI data came out, what a drop we had. Now, I still think there's more downside on the US dollar. We had this bigger wedge pattern, which we did break out of, but it looks to me like what price wants to do is come back into that level around 103. So in the near term, I would expect some weakness continuing in that chart. And if we continue to see that pullback, really the one thing, like if you're a dollar bull or if you're looking for a bounce, the one thing you don't want to see is this bottom trend line taken out. So you would buy at the first trend line here, which is 103. You could add at 101.50, this lower trend line. But if we start trading below this trend line, let's say at 101 or so, that's where a bigger collapse could take place. But the positive is that, remember, everyone needs to remember that the dollar is not independent, right? It's basically the value of the US dollar versus all other currencies. And the solace in that is that the Japanese central bank, the Europeans, they're all printing their currency just like the US. So it really is going to at least keep the dollar relatively strong in the near term as long as they're doing that.
And that doesn't mean, though, that gold will not rise, because it's interesting where if you look over the last 20 years, it's not like we've seen a decrease in the dollar index compared to where gold has gone. So, it may be inverse day to day sometimes, but over the long run, it doesn't necessarily seem to have much of a correlation with the precious metal markets.
That's right. And it's important to recognize that the dollar trades against other currencies, but those currencies are being printed just like the dollar, right? So gold is much harder to mine. It's much rarer. Other metals are as well. So those over time should go up against the dollar in theory, while the dollar may hold its value against the comparison currencies around the world.
And before we let you go, did you want to remind our viewers of some of those price points for both gold and silver? Because I know many of our viewers are keenly interested in the precious metal markets. So can you share with our viewers again the gold and silver charts?
Yeah, so on silver, you're watching for a $30 break. And if you can get a $30 break where price stays above 30 for, let's say, a 2-day period, I think the next leg up is to 35, then 37.50. If you're asking for a longer term price point, I would say the $50 level is where it's ultimately headed in the next, let's say, 12 months, maybe 12 to 18 months. On gold, going into this year when we were below 2,000, I had a $2,500 price target. I still think that gets hit this year, a pierce of 2,500. And then I think, again, if things play out like it's looking, you could be looking at a $3,500, maybe even $5,000 price point on gold, but that would probably be a few years out, probably 3 to 5 years out, $5,000 on gold. But certainly an amazing move on gold historically if we get up to $5,000.
Now, it seems like silver may be playing a bit of catch up here after we've seen the run in gold. Do you anticipate miners to also do the same?
I do. In fact, miners have been now outperforming, right? So miners underperformed in 2021, 22, and 23 because inflation was so high and the price of these metals were not going up to compensate the miners for that. So they just got crushed by having to pay for higher labor costs, higher equipment costs, all these costs. But now we're seeing the metals play catch up, and the higher the metals go here, the more money these miners can make. So I think, again, on pullbacks, miners are great opportunities as long as gold continues to maintain its surge here.
And what would be some of the reasons that may give you concern about the gold price, or are you pretty confident that we're going to be higher prices by the end of the year?
I'm pretty confident. It's not to say we're not going to pull back. I actually do think we could pull back to 2,200 just because, it's a technical support level. And I think, you almost have too much bullishness right now. You got to kind of flush out a few of the weak hands. But it certainly is, as long as we don't on a technical basis get back below that 2075 level, then it's buy on pullbacks versus sell on rips. So you want to buy on pullbacks and then look for higher highs unless we get back below that 2075 level.
Fantastic. Any last thoughts before we let you go, Gareth? And where can our viewers find you online?
Yeah, so just continue to follow the data. I think that's so important, just to look at the facts. Don't get swayed by mainstream media and the narratives out there, or even social media. It does a great disservice, I think, to investors by kind of FOMOing, people in and so on and so forth. So just be aware of it. Look to the charts. That's why I use the charts, because they're unbiased. It is what it is on that chart. That's all there is to it. And then you could find me at verifiedinvesting.com, and it's a hub for top-level traders and investors and newer traders and investors that want the data, the unbiased nonsense. Check it out. It's pretty amazing.
Fantastic. Gareth, thank you so much for your time, and God bless.
Thank you. You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 13th through May 20th, 2024, while supplies last. First, we feature 1 ounce Gold Krugerrand at $49.99 over spot. We also have 2023 Silver 1 ounce Krugerrand at $3.10 over spot. And finally, we have Silver half ounce Canadian Polar Bears at $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.